talk a little bit about what's going on with mortgages kind of during this time of COVID and so on and so forth. Haley, how are you doing today?
I'm good. How are you?
So tell us, like, what's changed in regards to credit scores? I've heard quite a bit about that. Some things that are changing. What has changed in regard to those credit scores?
Sure. There is a lot of change right now.
Okay.
And what you're seeing is it's kind of all over the place with what those changes look like. And most of them are increasing credit score thresholds on what those loans look like right now. We are seeing that there's two different parts of the market that we're seeing a lot of movement in, and that that FHA, RD, government lending section, they are increasing that minimum threshold for the credit score you have to have. And so that's important. And then on the total opposite end of this thing, jumbo loans are seeing a ton of problem. We are continuing to do them a lot right now and not having trouble, but most of the time these jumbo loans are going to other vendors because they don't have the capacity and they don't service. And so there's been a dry up a little bit there, and some lack of options would be what I would say. And so credit is going to be a big qualifying problem for some people right now. So what's happening?
When you say jumbo loans, like for everybody else out there, that is like, what is the threshold for jumbo?
510 loan amount.
So
you have to, your loan amount has to be over that $510,000 threshold. And so, some people are saying we won't do them for certain, you have to make a certain down payment, or from what I understand, some of the big banks are saying, okay, we're not going to allow you to come to us with those. We will only do them here in-house. And so that's where we're seeing some change. We haven't changed it, but you can't predict the future right now.
So for the rest of the population, it's not doing a jumbo loan. Basically, those minimum credit scores have increased.
They have.
And like, just for example, what would be your minimum credit score on your FHA before and now?
Sure. So before, I want to say it's just been a few weeks that our changes have gone into place. We were at a 580 on an FHA loan. And now we have moved our cusp up to a 620. However, I'm hearing a lot of places are at 640 and 680. And so, each incremental change changes access to those home loans. And I think that each lender is doing a risk review much more frequently than in the past to determine, okay, is this a fair threshold? Do we need to come back up with it? What does it look like for us?
That makes sense. But it's still, in the scheme of things, it's still a really good time to buy. And it's not like you have to have a 770 credit score to purchase. So that kind of helps, I think, people grasp that. So what can we do right now, at a time like this, to keep our credit score high?
So I think that now is more important than ever to watch these scores and to be careful with them, and that everybody has their own thing they're going through right now, and all of our stories are different, and that protecting your score is the most important thing you can do. The top priority for me is managing your mortgage and making sure you don't miss those mortgage payments. Unfortunately, when that happens, only time can heal your score. And so, understanding if you're someone that needs a forbearance, understand it. Understand what's coming at you. Make those phone calls. Educate yourself. And then the other things that I think are super important to watch right now is we're maybe having to reallocate some money and change what we're doing. So if you have to use your credit card, and usually you pay it off each month, but this month you just can't. Really try to make sure you stay within those ratios of where it needs to be, so that whenever it's time that you're ready to buy, your limits are within there, and you have really protected to make sure you're in the best possible situation. And so the biggest thing I would say is try to avoid late payments right now at all costs.
That makes sense. So the late payments are the ones that just kill your credit.
They do, and like I just said, only time heals it. Unless someone says, oh yeah, that was an error, which is rare, they're not going to delete it. And It's brutal.
Right.
And collections, those are the other thing that really are going to hurt you.
And to limit it down with what you're saying, like what are the critical things that I can do now so I can buy later?
So I really like to, on your credit cards, I really like to advise that you're at 30%. So if you have $1,000 limit, I really don't like to see you go over $300 a month. I am talking and coaching people getting ready to buy, I would say that I am very payment sensitive. And I think most of us are, because that's what matters. And so I always encourage people to sit down, do the math. What does it look like? What can you afford? And then let's work backwards from that to, okay, that means this loan amount. That means this down payment. That means this, and so that you're working through and getting to something that when you buy it that day, you can afford it that day.
Right.
And so, if you can, I always encourage people to put a little bit in savings, even $20 makes a difference. And then watch those thresholds. Right now we have not seen a change in allowable debt ratios. Most of the time I jokingly say that it's a big fat lie in what we do, because that number is so high, and that watching that ratio, but it could help people in a situation right now when life is a little bit different.
Life is tough. Yeah, or life maybe finances are tight.
Yeah.
So what does it mean to be ready to buy?
Oh, I think that there's so many definitions in there. I think that you have the emotional perspective of it that, we're ready to move. We're ready to let go of this one and this place of where we're at. But then I think that you need to be prepared for all of the things that come along with that. And I tell people often, this is not a t-shirt you can return. This is a real thing. And so, maybe spend 3 months going, okay, we think we can afford $1,400 a month. Great. I want you to put $1,400 a month in savings for 3 months. Prove it, and just really making sure. And that I think that home ownership is expensive. And so, do you have that reserve created for if the hot water heater breaks or whatever? And so I would say that I am a very financially conservative person. So being ready to buy for me is all of your things are in order and all of your numbers are in order. Of course, I'm the numbers person. So, that's what that involves around me. But I feel like your side of it is so different, because there's so much that they have to process. It could be that they've lost someone or something like that. That's the other side of it to me. I'm ready to buy.
That makes sense. And so, I guess the question would be, a lot of people like, okay, what can I reasonably afford? How do you figure that out?
I don't have a great answer, because I feel like we all are in such a different place. And my daughter's 5, she starts kindergarten. So I'm getting a big raise at the end of the year if we ever go back. And so I think what you can reasonably afford is a payment that allows you to pay it and to still live life in the way you like to live life, and that it allows you to go to dinner, or you want to buy your significant other a gift. You aren't going, ooh. And so I don't know that I think that there's a perfect number of, okay, at a 43% ratio, you should be just fine, because the debt I carry might be different than the debt you carry. And so I would say that the most important thing to me in being ready and getting ready is starting with a planning conversation. And and really plan and work through that and talk through that, because we go, okay, you qualify on paper. You good? And so,
that makes sense. And so we've kind of been talking about the real estate and the purchasing side of this, but what refinancing options are available at this time for folks that just want to lower their interest rate?
I think that there is an incredible opportunity right now. The most important thing is math doesn't lie. And so, sometimes you hear, well, this rate is so much lower. Yeah, well, you've also been paying for 12 years and you've paid most of your interest, and so it doesn't make sense, or whatever that looks like. And so I think that refinancing is circumstantial, and that each person, we need to look at what your situation looks like. How long is it going to take to make this up? I had a conversation last week that, yeah, it was going to save them some money, but they're planning on moving within 18 months. Well, that doesn't make sense.
Too much cost.
Yeah, and so, you know, as we sit at our desk and we work through all of these numbers, there is a real, you know, system, and we're being so careful to work through all of this to give people the right financial advice. And, you know, I feel a lot of weight right now because I am controlling people's future. And, you know, those people that you're saving them $300 a month, holy cow, what an important time to do that. And so, you know, there's a lot of refinancing that we're doing. We have historical volume happening in our industry. And so, you know, the things that I would say to someone thinking that they want to refinance is give us some grace. We are trying, we are working, and, you know, we're separated from our support staff. And so they take a little longer right now.
And for time frame.
I would, and that, you know, it's all about the math, and that every single person is going to get a different answer as you're working through and thinking through this portion. And, you know, I've got a lot of conversations happening that we originally were going to buy a house, and okay, no, maybe we're not going to do that anymore. Maybe we're going to go into refinancing, and working through and trying to figure that out.
That makes sense. I think that helps us a lot too. And guys, what I would say is, if you're at those critical points where you're thinking about, okay, do we need to sell our house or do we need to refinance it? If you'll just reach out to us at the Taylor team, and what we can do is do a market analysis, give you all the financial information you need, connect you with a local lender so you can make the best decision for yourself. And you kind of need all those factors. That's what we're here for.
And that's what we need you for, is because an appraisal matters, and where your value falls in on a refinance changes if you have to have mortgage insurance, how much that mortgage insurance is. And so having a professional that understands the market and what's happening in that market to kind of help guide us through, although they're not selling their house, we need you. You know, and you're here.
We're here obviously to help you sell and to buy other houses. But the other side of that is, if you just need a value because you're trying to figure out if your refinance is going to work with your lender, or if you need to be connected with that lender, that's what we do. So I appreciate you guys' time, and Haley, thank you so much for helping us out here and educating us. And again, anything you guys need, you reach out to us. You've got our information below, and I hope you guys have a great week.